Good morning, ladies and gentlemen. My name is Mike O'Neill. I'm the chairman of Citigroup. Joining me on stage is Mike Corbat, CEO of Citigroup. On behalf of the rest of the board of directors, we're very pleased to welcome you to the 2018 Annual Meeting of Stockholders. I will chair today's meeting, and Rohan Weerasinghe, our General Counsel and Corporate Secretary, will act as Secretary of the meeting. A few years ago, the board decided to alternate our annual meetings between New York City and other cities integral to Citigroup's businesses around the country. We have since held our meetings in Dallas, St. Louis, and Miami, and are happy to be hosting our meeting in Chicago this year. Significant numbers of Citi employees come to work in the Chicago area, and many of our stockholders call Illinois home. I worked in Chicago for 8 years. I came here in 1973 to interview for Continental Bank, and I stayed in this very hotel. So the fates are saying something. I don't know exactly what, but we thank you all for your hospitality. We also extend a warm welcome to our stockholders who are participating in today's meeting through our audio cast. At this time, I'd like to introduce the members of our board of directors who will be standing for re-election. Their backgrounds and qualifications are described in detail in the proxy statement you received for today's meeting. I'd ask that our directors stand when I call their names. In addition to Mike and myself, our current directors are Ellen Costello, John Dugan, Duncan Hennis, Peter Henry, Franz Humer, Leslie Ireland, Renee James, Eugene McQuaid, Gary Reiner, Diana Taylor, James Turley, Deborah Wright, and Ernesto Zedillo.
Tony, Mike.
Mr. Weerasinghe.
Thank you, Mr. Chairman. I'm pleased to report that all legal formalities for this meeting have been met and a quorum is present. I would like to remind you that today's presentation may contain forward-looking statements which are based on management's current expectations and are subject to uncertainties and changes in circumstances. Actual results and capital and other financial conditions may differ materially from these statements due to a variety of factors, including those in our SEC filings, including without limitation the risk factors section of our 2017 Form 10-K. At this time, I would like to review for the stockholders the agenda for today's meeting. In the agenda and the rules of procedure for this meeting, which were placed on your chair before this meeting, there'll be some additional information I will provide to supplement that. We'll begin by having our CEO, Mike Corbat, give the State of Citi presentation. At approximately 9:30, we will turn to the business portion of the meeting, which are the proposals to be considered. The proxy statement you received for today's meeting describes 10 matters to be voted on today. As described in the agenda for today's meeting, we will begin with the presentation of the 4 management proposals. In order to be sure that stockholders are able to ask questions about all of the management proposals, we will introduce them all at once. You will then have an opportunity to ask questions about any of the 4 management proposals brought before this meeting. This process is designed to maximize the amount of time for discussion of stockholder proposals and for stockholders to be able to ask questions about the company during the general Q&A session at the end of the meeting. No later than 10 o'clock, we will conclude the discussion of the management proposals and discuss the stockholder proposals. Each stockholder proponent will then present his or her proposal, and you will have the opportunity to ask questions after each one is presented. Again, general questions about the company should be asked during the Q&A session later in the meeting. No later than 10:30, after the presentation of proposals, we will collect the ballots and close the polls. While the votes are being counted, you will have the opportunity to ask any general questions about the company. No later than 11:30, I will report on the vote, and the meeting will be adjourned. As a courtesy to your fellow stockholders, I would remind everyone to turn off all electronic devices. In accordance with the procedures for this meeting, photographing, recording, or videotaping these proceedings are prohibited. Thank you, Mr. Chairman.
Thank you. Our CEO, Mike Corbat, will now give a presentation on the state of Citi.
Thank you, Mr. Chairman. And good morning to all my fellow shareholders joining us today, both in Chicago and by audio cast. For over a century and a half, this city has played a central role in the economic growth and expansion of the United States. In the 1860s, our predecessor firm, the National City Bank, helped capitalize the transcontinental rail system. The railroads we finance redrew the economic map of America and transformed Chicago into the commercial capital of the Midwest. Half a century later, in 1911, we partnered with Commonwealth Edison to finance the L mass transit network, which connected the people of Chicago as reliably to each other as the railroads connected this city to the rest of the country. Since 1992, we've underwritten $3.6 billion in municipal bonds that have helped McCormick Place maintain its lead as the largest exhibition and convention center in the United States. And in keeping with our role as a leading financier of critical transportation infrastructure worldwide, it was recently announced that we're a lead underwriter on a major bond deal to expand O'Hare International Airport. This follows the work we began back in 1982 as the lead financier on the airport's first major expansion. Today, Citi's core consumer and institutional businesses are both well represented in greater Chicagoland. More than 2,000 Citi colleagues work in Chicago and in Illinois in roles ranging from commercial, investment, and private banking to markets and research, operations and technology, anti-money laundering, and risk management. Our 60 branches here safeguard about 500,000 accounts and $7 billion in deposits. And our institutional business serves over 1,300 public and private sector clients, including the City of Chicago, the State of Illinois, Cook County, and Northwestern University. Last year, we made over 20,000 loans totaling more than $150 million to small businesses right here in Illinois. And in our capacity as a lead financier of affordable housing in the United States for the 8th year in a row, in 2017, we lent and invested over $400 million to construct more than 1,000 affordable units in this city and across the state of Illinois. Of the 35 Fortune 500 companies headquartered in Illinois, almost all are Citi clients. Chicago is part of a program called the Citi Accelerator. This initiative, led by our foundation, works with municipalities to bring innovative ideas and programs to city government to help improve the lives of its local citizens. Chicago is working with the Accelerator to expand and diversify its procurement process and increase the number of minority and women-owned businesses that provide services to the city. Taken together, our efforts here underscore that we take our mission to enable growth and economic progress seriously, not just in Chicago and Illinois, but everywhere in the world that we do business. Let me now recap for you our results from 2017. When I think back at 2017, and I think when we look back at 2017 from the vantage point of just a few years from now, I think we'll point to it as the year that Citi emerged from a period of simplification and restructuring into a new era of sustainable client-led growth. That growth is not going to come from acquiring competitors or entering into many new territories or expanding into businesses that don't fit our strategy. It's going to come from serving our clients with distinction. It's going to come from earning and keeping our clients' trust and protecting their security. and it's going to come from being an institution that takes as much pride in our positive impact on society as we do in our financial success. That's the context in which, at our Investor Day last July, I reiterated Citi's conviction that the decisions we made to focus our franchise and improve our client experience are bearing fruit. Today, our franchise offers a more compelling value proposition, accelerating growth, and steadily improving our returns. We also made it clear that we have one overriding goal, and that is to combine the positive impact of an improving environment with an even stronger business performance to deliver both higher returns on capital and increased returns of capital through 2020 and beyond. When we reported full-year results for 2017, they demonstrated the strong progress that we've made along the path and the upward trajectory that we spoke about in July. We continue to see strong results from the investments we made to streamline our infrastructure and drive greater growth in targeted areas. Those areas include Citibanamex, cards, treasury and trade solutions, equities, and investment banking. Our global consumer bank serves more than 100 million people in 19 markets in 3 regions. Across all 3 regions, Asia, Mexico, and the US, revenues were up 4% compared to 2016. From a product perspective, global retail banking grew loans and assets under management, despite the shrinkage of our physical footprint. Global cards also delivered growth, driven by higher loan demand and purchase sale volumes in all 3 of our regions. We continue to serve our clients with distinction while signing up new ones where our capabilities fit their needs. I'm happy to share with you today that we have an addition to our retail services portfolio and a new relationship with the iconic outdoor retailer LL Bean to deliver a partner credit card for them later this year. Our institutional clients group turned in an impressive performance. Total revenues were up 7%. We saw broad-based growth across treasury and trade solutions, investment banking, private banking, corporate lending, and security services. In equity and fixed income markets, revenues did decline compared to a more robust trading environment in the previous year. But we continued at the same time to deepen our client relationships and make good progress against our key initiatives. We also made progress toward our goal of improving our return of capital to our shareholders. The strong of results that we achieved in our 2017 CCAR, known as the stress test, is enabling us to return $19 billion to shareholders over the course of this cycle. We drove our common shares outstanding down by 7% from a year ago, and we plan to return, of course subject to regulatory approval, at least another $40 billion of capital over the next 2 CCAR cycles. When the Federal Reserve and the FDIC also found no deficiencies in our 2017 resolution plan, it further confirmed the progress we've made towards our long-standing goal of being an indisputably strong and stable institution. As for net income, the nearly $16 billion we earned on an operating basis was about $1 billion higher, or 6%, than what we earned in 2016. Yet, as a consequence of the passage of tax reform in the US, we took a one-time non-cash charge of $22.6 billion. That charge resulted in a net loss for the year on a reported basis of $6.8 billion. But there was good news embedded in that headline number. Having put that one-time charge behind us, we're now free of and able to focus on the longer-term positive impacts of tax reform for both Citi and for our clients. A lower tax rate leads to higher net income. That, combined with a multi-billion-dollar reduction in our tangible common equity, has a powerful positive impact on our returns. Our best estimate of that impact is to boost our return on tangible common equity by 200 basis points or more. On a symbolic level, our reduction in the value of our deferred tax assets, or our DTA, our remaining remnant of the financial crisis that indelibly marks not just the end of the post-era crisis for Citi, but a path to the future. About 10 days ago, we announced our first quarter results for 2018. They again confirmed our commitment to delivering against those targets we talked about at last year's Investor Day. And we're off to a good start, with a first quarter net income of $4.6 billion, or $1.68 per share on $18.9 billion of revenue, up 3% from a year ago. Revenue growth, positive operating leverage, a lower effective tax rate, and a continued return of capital each contributed to an earnings per share growth of 24% compared to a year ago. Global consumer banking revenues rose 6% in constant dollars, with strong contributions and positive operating leverage across all three of our consumer markets. In our institutional client group, revenue also grew 6%, continued momentum across our accrual businesses. And while fixed income revenues were lower than a year ago, driven by less investor activity, our equities business had its strongest quarter in years, reaffirming our decision to invest in that franchise. Overall, I'm pleased to report the progress we made towards the targets announced at last year's Investor Day. Adjusted for the positive impact of tax reform, our 2018 return on tangible common equity is 10.5%, and in the first quarter, we delivered 11.4%. And we continue to make progress on our efficiency ratio, driving year-over-year improvement for the 6th consecutive quarter. Now, I'd like to put those results and ratios in a broader context for you. And that is of a vast transformation having a huge impact, not just on our industry, but on every industry, as well as our careers, and just about every aspect and dimension of our lives. And of course, I'm referring to technology. At Citi, we're aggressively leveraging technology to enhance our capabilities, to streamline our process, to boost our efficiency, and deepen our client relationships. At Investor Day last July, we spent a good deal of time talking about the investments that we're making in technology to drive both revenue growth and productivity. The bulk of our efforts are focused on our own digital transformation and the execution of our mobile-first strategy. In our consumer franchise, we've shifted the majority of our investments to client-facing initiatives that we're confident will enhance the client experience. For our consumer clients in the United States, we're introducing new digital features at an accelerated pace because our customers have made it clear that they prefer to interact with us digitally. The most recent example of that trend is last month's announcement that we'll be rolling out end-to-end national digital banking across the U.S. later this year. In 2017, we launched over 1,600 new digital features and enhancements globally, many of which were the first of their kind in our industry. One extremely popular new feature for our U.S. cards clients is the ability now to add users, dispute charges, set up auto payments, and they can do that from all of their mobile devices. In Asia, the younger demographic is particularly disposed to embrace new mobile and digital features. Across the region, clients now have the ability to pay with points simply by sending an SMS text. And in Mexico, we're embedding even greater digital expertise into our Citibanamex franchise. We're seeing a rapid adoption of smartphone, digital, and mobile technology in what many people would describe as a heavily, at least historically, analog environment. That trend underscores the decision we made to invest in our digital and mobile capabilities, big data infrastructure, customer service, and modernizing our branch as well as our ATM network. On the institutional side of the business, We've also been strategically investing in technology and automation. One vivid example of the powerful ways we're improving our institutional clients' experience is our Citi Direct BE mobile application. The CFOs and treasurers of large multinational corporations who make up the bulk of our Treasury and Trade clients use Citi Direct BE to manage their daily Treasury requirements wherever they are. And last year alone, we moved over $2 trillion of payments off of our mobile platforms. Citi Velocity, which is our leading-edge analytics and trading platform, gives our fixed income and equity markets clients access to research, proprietary analytics, and trading capabilities for foreign exchange, interest rate, and commodities and futures products. Combined with Citi FX Pulse, our global foreign exchange solution for corporate clients, the Velocity and Pulse platforms are used by over 125,000 clients in 130 countries around the world. At the Citi level, we're investing in cloud development to enhance storage and network capabilities and process automation to improve efficiency. And last, and I can certainly assure you but not least, we're always enhancing and investing in our cyber and information security infrastructure to keep up with the pace of a highly complex threat environment. While we continue to innovate and leverage our digital and mobile capabilities, we're equally committed to evolving Citi into an organization that's fully focused on improving the client experience. We can't control macroeconomic or the interest rate environment, but we can and have to control the impact our decisions and actions have on the many ways we engage with our clients. We want every interaction with a client to be a positive experience, and I believe that goes beyond simply product or services. While those are certainly important, and we want all of our clients and shareholders to know that we're the type of institution that they really want to do business with, and first and foremost is that Citi is a company with an established mission, which is to enable growth and progress in all the communities we serve. Many of those communities were severely tested in 2017 by the devastation brought by Hurricanes Harvey and Irma, which in rapid succession swept through Texas, Florida, and the Caribbean. In those areas and others impacted by natural disaster in 2017, including Mexico, which suffered a massive earthquake, and the Southeast Asia, which was hit hard by flooding, many Citi colleagues went to extraordinary lengths to support and protect our people and clients and the communities. The degree of destruction these storms left in their wake were powerful reminders of the fact that more places around the world are experiencing extreme weather. And that's why we're helping to enhance the resiliency of critical infrastructure as a key objective of our work with public sector clients worldwide. These extreme weather events also make our 10-year, $100 billion environmental finance goal even more important. I'm proud to report that we've financed $57 billion of transactions since we announced the goal, putting us firmly on track to meet this commitment several years early. And we've been focusing on social issues where we think Citi can make a difference. In 2017, Citi's Foundation's groundbreaking Pathways to Progress program, which is committed to ensuring that today's youth are prepared for a 21st century job market, went global. Today, its current 3-year goal to reach 500,000 low-income young people worldwide, including right here in Chicago by 2020. Citi's total $150 million investment in this program is our largest single philanthropic commitment that we've made in our firm and our foundation's history. We were the first bank to measure and publish and to take concrete steps to ensure equal pay among all of our employees. And while we began this work in 3 countries, in the US, UK, and Germany, we're committed to taking the same steps globally. And let me be clear, we believe in equal pay for equal work. More recently, in the wake of the mass shooting in Parkland, Florida, I spoke with a number of our clients, our colleagues and friends, and while there are a wide range of opinions on the regulation of firearms in the U.S., I have to say that those candid conversations convince me that there are areas where we could and we should try to find some common ground. Our recently announced firearms policy is intended to preserve the rights of responsible gun owners, like myself, while relying on best sales practices to keep firearms out of the wrong hands. And it's intended to help the lives of citizens in cities just like this one, which for all its vitality and growth has lost so many citizens to gun violence. As I stand with you here today, you can be sure I'm aware that while some will find our policies too strict, others will find them too lenient. We feel it's a common sense approach, and we're pleased to see it informed draft legislation at the Chicago City Council regarding which banks the city will do business with. I'm very grateful for all of you standing with us as we build City of the Future. As I look back on the decisions we've made over the past several years to prudently grow and the decisions you made to invest in us, I sincerely hope you share my conviction and firm belief that our company's best days are in the years to come. Thank you for this opportunity to share these thoughts with you today, and thank you for being here. Mr. Chairman.